we've really talked about 3 different cycles, if we don't include the normal business cycle. The 18.6-year cycle, the work that Ray Dalio did, and the work in the fourth turning that all points to about the next couple of years where we're living right now, it got my attention.
So today we have Jeff Gunther. I wanted to bring him on. He had a really cool series on economic cycles that I watched on YouTube. I think a lot of people miss, how much we can look at history and learn from what's gonna happen or might happen. So I thought he'd be a really interesting guest. Has a cool story, business life, real estate, author. So welcome to the show.
Glad to be here.
Yeah. Could you give everyone a little, condensed version of how you got here? What the business life looked like for you?
I'll try. I first got excited about real estate when I was about 9 years old. My dad was at the dining room table doing what looked like math homework, which he didn't often do, with a bunch of papers spread around. And I asked him what he was up to, and he explained income taxes to me. Apparently my parents, my dad was in the military and they'd moved, and they were unable to sell their house. So another family was living in our old house and paying something called a mortgage. And I thought that was really cool. And I've been excited about real estate since, and invested in my first home or first house in 21. Actually, it wasn't. It was a trailer park. And I've been invested in real estate as a pretty much long-term hold guy ever since, although I've been distracted by a lot of other things throughout my life. Significantly developed large customer-oriented multidisciplinary dental practices in the Ottawa area. Loved doing that. Worked with my dad, who was a dentist, and sold those, had a bunch of money to invest. And I did not actually do that. I did some traveling through Europe and did a couple master's degrees, and eventually invested, I think I shared this with you before, in a national chain of retail stores on April Fool's Day 2008, and we had to close them all 9 months later. And that's kind of when I learned that there are cycles to things. If you catch something at the wrong time, it can be catastrophic. So I lost a little bit more than everything, and I had to make a decision what to do next. And there were 2 things I knew quite a bit about. One was the business of dentistry, and the other was real estate. So I chose to go full on in real estate investing here in Edmonton, and acquired almost 500 units in about 5 years. Probably not as quick as you are doing, but I did that. And in the process, I wanted to learn more about, can we predict the future? Can we know what's coming next? So I always like to ask people, and probably when you and I first met, I said, how do you make your investment decisions? What drives your choices? So that's where a conversation led to, I think, cycles.
If you had studied or knew what you knew today, would you have done the dentist thing or the
dentist thing? Definitely.
Yeah.
Because of the opportunity to work with my dad, and because that's a great business. When people ask, if you knew what you know today, would you have done things differently? Yes, absolutely. Interestingly, in 97, I completed an executive MBA, and I wrote a major paper on using demographics to predict the direction of real estate values in Canada, and did quite a bit of research on that at the time. The reason I was curious is because the 10 years leading up to that was pretty flat. There was, nothing really moving up or down anywhere. And I was curious, are the real estate cycles really dead? Is real estate really dead? And I wanted to find out. I did the research. I wrote the paper. It kind of showed that in the next 5 years would be a great opportunity to acquire. And I read it about 5 years later, and I thought, I wish I'd done everything that I suggested in that paper. So yeah, I didn't take advantage of really my own advice, but the thrilling thing was there are certain ways to figure out what's going to happen next.
How did you at the time choose Edmonton?
When I came back to Edmonton,
Yeah.
well, I was devastated. I was financially and emotionally exhausted, and I had a choice of what I would do and where I would do it. When I zeroed in on real estate, it could have been anywhere in the world, except the learning curve in other countries was high. So I narrowed it down to Canada. Could have been anywhere in Canada, I suppose. I already had some relationships in Edmonton, and I had many years earlier sold real estate here in Edmonton. So I knew the market a bit. I, in fact, owned at least one property here and some development land in around Calgary. So the decision was based on kind of narrowing it down to what's the easiest route because I got to get going fast. But also it was 2009, so Alberta had just gone through a couple of years of like 25% increases in values, 50% increases in values. It was crazy, and that kind of came to an abrupt stop in about 2008, and now it was 2009 going into 2010, and properties had dropped 30% or more, and I figured that was a good buying opportunity, getting in at the bottom of the cycle and hopefully riding it through to the top.
When you wrote your paper on the demographics and stuff, what would be the ones that you would tell people to look for if someone wants to get into real estate today? What are you?
So Shane, demographics is probably the only thing we need to understand to make wise decisions on residential real estate investing. Demographics is the study of what do people who are born in certain years do at different stages of their life. So we know pretty much what a 10-year-old is going to be doing. When you get to 17, 18, 19, it's probably student. Early 20s, perhaps out on your own, new in the workforce, getting married late 20s, early 30s, families, into the 40s, maybe a second home, into the 50s, 60s, maybe the kids are moving out, the empty nest kind of scenario, and then into 70s, 80s, where do people want to live out their latter years? And if you can find the data on what that is, you can figure out what the population is going to be doing next and know what to invest in. That's a macroeconomic decision that you can make. And in Canada, there's amazing information on that through Statistics Canada and CMHC, and in Alberta Treasury Branch has, and Province of Alberta's website. There's amazing information that tells us what's coming next as far as demographics. How many people at what ages and figuring out what they can be doing. You just look at your own life and the people around you.
And how much does it affect it? Like what I see happening now is that we built this whole system on people, at whatever age, 80, moving into an old folks home, but now they can have a pretty good quality of life for another 15 years. And, that's got to throw things off.
Yeah, I think so. When I started reading that, invest in seniors' residences, and it's like, well, exactly what you said, that people want to age in place. There still is a need for seniors' residents, and people who have invested in that have done very well and will continue to do well. But you also have to drill down into the habits. So that's more psychographics. What are the values and beliefs and things that people do at different stages? So what I did when I was in my 20s might be very different from what you do, and what your even things like lifestyle. Where do you want to live? Do you want to drive a car or not? Younger and younger generations have different options that are available to them. So you can't say that what I did in my 20s or 30s or 40s is the same as what you would do, or your generation.
Yeah. And how much did something like immigration affect it? Like now we're seeing 500,000 people a year.
And I'm excited about that.
Yeah.
I'm excited about that for where you and I live right now. So the demographics, I would say it's natural reproduction in Canada and most developed countries. It's less than what's required to even maintain population. So we also look at migration, which is moving across provinces. Who's moving to Alberta or who's moving from Alberta. The last almost 10 years, we've had an outflow of residents from Alberta. And now in the last 3 or 4 quarters, we've had a tremendous amount of people coming back. So that is part of it. What attracts somebody to a province is jobs, affordability. And then what you mentioned is immigration, and Canada has a big push on immigration, which is new people coming here, which brings me back to supply and demand. If we've got 1 million people coming to Canada and we're not adding residences at the same pace, the prices have to go up.
How much of that big push for immigration do you think is just to expand the economy? So I always look at it and say, well, the GDP is going to grow if we have 1 million more people, but the GDP per person might not, right? And so is there a net benefit to the country if we move all these people in and the GDP per person is actually going down?
I don't know, Shane. I'd love to ask you that question. Do you have an idea on that?
Oh, personally, I guess there's a benefit for being in real estate and stuff, but as far as the average citizen, there probably isn't, no, unless there's jobs to fill and stuff. But
the benefit for the average citizen.
Well, if the GDP is increasing just because the population's increasing, but it's not increasing at the same amount as the population. So sure, our GDP might go up $1 billion and we move in 1 million people or whatever that number is. Yeah. The GDP per person is actually going down. So that means your services are going down per person. Mm-hmm. There's not a net benefit to the country. There's a benefit to move to say we have a higher GDP, but as far as a net benefit per person, we need to. Yeah, as long as everybody's contributing and starting businesses and stuff, it does help. But
yeah, and I think it's important for people to contribute.
Yeah.
Unfortunately, in developed countries, like there's cycles of decline, and right now, my understanding is there's more jobs than we have people in Alberta, and or skilled people. So if they need to come from outside and do the work that we're not doing, I guess that's a necessity. How does it affect the quality of life for those of us who are here? That's more complicated than I'm able to figure out.
Yeah. Well, and again, for me, I love it. I love their immigration is filling jobs. For everything that I like about it, there is probably a net negative. So I love that rents are going up and property values are going up and businesses are full. But the flip side of that is someone's trying to buy a house and now, and it's harder for them because the price is up higher. And I know there's lots of things that go into it. On the economic cycles, let's get into that a little bit and maybe just explain to people, what that cycle does look like, what to look out for. And
yeah, with a business background and I guess my earlier training from when I was young, I always understood that there was a business cycle and it was 5 to 8 years. So from like trough to peak and back again. And it actually tracked with real estate at one point where if you from one peak to the next might be 7 or 8 years. And if you bought in the middle of that, you could exit at a higher point down the line. And when I came back to Alberta, I actually was operating under that understanding is the business cycle. And if we had just peaked in say 2007, 2008, I figured, and I told partners that I invested with that I expected with it. And I said this, I put something in writing, but I also said every time 5, 8, 10 years, maybe more. I did really believe it would be 5 to 8 years when we could start exiting, but I knew that we cannot predict the future and that it could be longer than that. And so I left that out, and that is indeed what has happened. We're into 10, maybe more now. So I was again confused, like I was when I asked, is real estate really dead back in the 90s? And I wanted to figure out, how did I get this wrong? Are there other cycles? And I went on the internet and started doing a little bit of searching about cycles, and I came across several different people talked about the 18-year cycle, or the 18.3-year cycle, or the 18.6-year cycle. And there were a few different people that spoke into that. Phil Anderson was and is the most prominent, and he's written a book called The Secret Life of Real Estate and Banking. That book came out in 2009, I believe. He did about 200 years plus of research and found that there is, and it's called the 18.6-year cycle now, because it's 17, never less than 17 years, never more than 21 years. And it's a flow of real estate that is very predictable. And I picked up that book, which wasn't easy to find. I think it's a little easier to find now, and read it, and was convinced that there's a longer than the business cycle, maybe a couple of business cycles in there, that will drive real estate. And there's some very predictable things that happen at each stage. So the 18.6-year cycle is essentially 14 years of growth, punctuated in the middle, about 7 years, with a pause or a little bit of a recession, followed by 4 years of decline. And for listeners, I really want to encourage them to do their own research and find out where we are on that cycle. My understanding is that we're coming towards the end of that 14-year cycle, and that we're going to have a peak, and then things are going to drop off. How close are we? I don't know for sure, but
so I guess just a maybe ignorant question, or what people would probably ask, is why don't you just look at the last peak and go 18 and a half years? Should be right in there, right?
Well, you could, except that 18.6 is an average, so you could be off by a couple of years, and it could be a problem. But these things are fascinating, and looking into them is one thing, but taking one philosophy or one way of looking at things and leaving it that alone and just figuring it's going to happen like magic, the world doesn't work that way.
Yeah, but the actual chart, if someone pulls it up on it is pretty much exact. You know, like it looks, it goes up and down, pretty precisely.
Bring it with me.
And we can put it up on the podcast too. But if you take the 18.3 and the 18.6 and all the different ones and overlay them, is it the same pattern?
Well,
similar.
One of the things I meant to say at the outset is everything I share with you is my opinion. It's based on research that I have. I don't know the future. I have not done the original research on these things. I'd encourage anybody listening or watching to do their own research and find out where we are on those. And anybody who wants to follow somebody else who says something, that's a dangerous position to be in, just because somebody else said something. You need to check what is actually happening in the geographical place where you're located. What's the economy doing there? So there's all kinds of nuances. The diagrams are specific because that's the best way to draw a diagram. What's going to happen next and when, but the variability is high. It's better to look at what are the types of things that would happen. So towards the end of an upcycle, we hear in the news doom and gloom and everything's going to crash, and that's the sensational news. In the background, we find that governments and lenders do not want the real estate market to crash, because not on their watch, at least. And so they go to extraordinary measures to lengthen that out. And I think that's the phase that we're in now and that we're going to see in the next couple of years. Yeah.
In your opinion, if COVID hadn't happened and that money didn't get printed at the rate it did, do you think we'd be farther ahead in the cycle? Like, do you think that just prolonged the...
Well, so Philip Anderson has a partner at Keel Patel, and they would kind of say and point to the diagram of the 18.6-year cycle and say, remember that 14 years up, with partway through, there's going to be something that will stall things. And they would say, well, they don't know what it is, but maybe that was it. So for a while, things slowed down a little bit, and then it just chugged on again as before. We know sort of what's going to happen, but not exactly what's going to happen. And then when something like it triggers printing of money, for example, it builds onto the second half of that cycle. And, how could you predict it? Couldn't. And is that what caused it? Maybe.
Couldn't, but I mean, you showed me that little excerpt from that book that was written in the 90s, and it pretty much laid it out exactly, didn't it?
Okay, so you're coming up. We sat down before and looked at that. I read about the 18.6 year cycle, and then I came across Ray Dalio's work, Principles for Dealing with the Changing World Order, and that came out in 2021. And some of your listeners may be familiar with Ray Dalio as the billionaire hedge fund founder, Bridgewater, and just brilliant work and deep research. His belief is that artificial intelligence combined with human rationality is what drives his decisions, and I think always will. But he went back thousands of years and came up with some information that points to a cataclysmic shift coming up in the next little while that we haven't seen in our lifetimes or our generations in 80 years or so. That was interesting. And then my friend Jeff Stork, when I shared that with him, he said, have you seen this book called The Fourth Turning that was written in 1996, I believe. And in 1996, the theme of this book, and again, listeners have to read this was by Neil Howe and I'm going to look up the other, William Strauss. So in 96, they wrote that there are 4 turnings. So every one was about 20 years. Strangely close to the 18.6 year cycle. But there are 20-year cohorts, 4 of them. First turning, second turning, third turning, fourth turning. And they're very specific characteristics of that generation. And the book is worth reading. The big takeaway for me was that the first turning began towards the end of the Second World War. So back in about 1945, there was no aptitude. Is that the right word? No comfort level whatsoever of sending young people back into war. It was just horrific. You and I don't understand that at all. Maybe the opening scene of Saving Private Ryan gave me some insight on how horrible that would be. And so in 80 years, we haven't seen a war like that. There's wars all the time. There's the possibility of war all the time, but it was just so horrific that the generations of the older generation would not send people into that. Now we've forgotten that. So if you're younger than 80 years old, you don't understand it. If you're older than about 80, you might have some recollection. Well, I guess you'd need to be 90 or plus to remember. And people that are at that age and stage in life are concerned that that sort of thing could happen again. So the book you're referring to, The Fourth Turning, I asked my friend to send it to me, and I cannot read this, but there were, on page 274, I think, or 272, there were 5 things that they said between 2005, 2025. Here are 5 things that could happen. They said it's unlikely that any of these will happen, but these are the kinds of things that could be the catalyst for a crisis. And when I looked at them, all 5 of them are very eerily close to what we've seen happening in the last few years. One specifically says the CDC could announce a pandemic or a worldwide, virus that would shift the way we do things and think about things. That timing lines up with Ray Dalio's work as well. And Ray Dalio points to 3 causes, and I believe they are the increasing wealth gap between the rich and poor that is tied to economic unrest. You see that happening more and more now. He points to a debt crisis, which is listed in the fourth turning as well. And then the other thing was first time in a very, very long time, the U.S. has a challenger or a potential challenger as a superpower, and that he talks about China and that. So when I discovered that we've really talked about 3 different cycles, if we don't include the normal business cycle, the 18.6-year cycle, the work that Ray Dalio did, and the work in the fourth turning that all points to about the next couple of years where we're living right now, it got my attention.
So everyone should sell everything then, hey? Jeff said. Would you? So one thing, like, and I'm too young to have been through all these cycles, so it's always hard when you're in it because on the way up, it's, you know, it seems great and everything. In real estate though, or multifamily, I always try to think of like what could happen that brings that down. Because for me, I don't really care if I have a $10 million building and tomorrow someone says it's worth $5 million. If I'm still collecting the same amount of rent and can service the debt, that value, unless I'm selling, doesn't matter too much. And then with all these people coming in and the rents where they are, I just struggle to see like what could happen. I know there's stuff that could happen, but I don't like, do you see what would be a scenario where multifamily is in a bad spot, or is it this is a cataclysmic?
So a couple of things. You mentioned that you're too young to have lived through all these cycles, and that's true for most of us, which is why we need to look at history and do research and look to the wisdom of older people who've been through some of these things. But, you know, I've timed things poorly. I think had I done what I've done in any province but Alberta in the last 10 years, I'd feel much more credible as, you know, a wise sage. I find people that have done very well in a single cycle, I call them single cycle gurus, because everything they did, they got the timing right. It was luck, which is good. Everything they did worked, and now they know everything. And to think that that's going to keep going on is not very realistic. So your question about multifamily, I think, well, again, cycles. Stock market, I found a credible article, and I think there have been some differences in the amount of time. But if you were to invest in the stock market, for the existence of it, for any 20-year period, your return would be about 8.5%. So whenever you exit, as long as you just stayed in, there are going to be ups and downs. You're going to have winners and losers, but you're going to get a decent return. So the stock market's been very good, and maybe it will continue to be. I'm not in any way an expert in that. But there are businesses that used to exist 50 years ago that were huge and are no longer here. So they can disappear. Your multifamily building is always going to be a multifamily building. If it's got 100 units, it's 100 homes for families. It's always going to be worth something in the market. So as long as you look after your debt or figuring out how you're going to pay any loans that you have against it, you're always going to have something of value as long as there's people to live in it. So my belief that I've been operating on is hard assets. So hard assets are something you can touch, and homes would be that. I think in the long term, it's pretty safe. The other hard asset would be precious metals. I don't know a lot about cryptocurrency, so I don't want to get into that. But precious metals like gold and silver are an enduring store of wealth, and that has been the case for hundreds of years, thousands of years. Those who speak about precious metals or gold, interestingly, Warren Buffett is kind of hard on it because he says it's you dig it up, you dig another hole, put it in it, leave it there, you don't earn any income from it. That's true. Whereas in the stock market, you could have made dividends and equity gains. So the store of wealth that is something like gold, which has I have to look this up, but I think doubled or tripled since in the last 10 years. There's an author, Rich Dad Poor Dad's Robert Kiyosaki has an associate, I guess, who wrote a book on investing in gold named Michael Maloney. And chapter 13 is about 2.5 pages that you would miss if you were just reading quickly. But it answers the question, what am I going to do when gold is 5 times or 10 times what it was when he acquired it? And he says, I'm going to buy real estate. So his belief is that cash flowing equities, passive cash. You and I both know that real estate isn't passive for everybody, but passive cash flowing equities is where he ultimately wants to be. He just thinks that gold will get him there faster than owning the real estate. So you're probably good if you own multifamily, Shane.
Yeah. The problem I have with gold, and it was kind of the same with crypto, is a lot of these guys, it could be Jim Rickards or any, they always have the same with this guy, whoever you mentioned there. They have this lofty, hey, it should be 50, but it just never does. There's times when I'm like, when we printed as much money as we did the last couple, this is it. This is when gold should have been 10,000 an ounce. I think Jim Rickards says it should, like he's done some math and says it should be 15,000 an ounce and it's 2,000 or whatever. And when should that happen? I don't know, but part of our conversation today is this long cycle, this long generational cycle that's 80 years, which hasn't happened yet. So it could be still in the future. I love, to the extent that I can get my dad to tell me secrets about his childhood, I love to listen to them. And he told me a story when he was growing up in the midst of that war in Germany, where his mother gave him what seemed like a huge sum of money to go to the store and buy whatever he wanted. By the time he got to the store, it was worthless. So my dad lived through that, and he's in his late 80s now, and he's been very careful his entire life and is looking towards some kind of cataclysmic event that you in your short life and me in my short life think maybe should have happened 3 years ago or 2008 or 2000, or we look back, why not then? I've heard it said there's no bad time to buy gold as long as you're buying it for the right reasons, and it's not to trade it. Yeah. My great-grandpa actually moved from Germany as well, and my grandpa always used to talk about you'd go to a restaurant and you paid before you ate because the price would be so different by the time you got your food. Crazy. And it's wild. People can't understand. I don't think we can really get our head around that. When 8% inflation seems wild to us. Yeah, and in the news we're like inflation's, I think everybody reads about or hears about right now, but we haven't seen inflation yet, and we want to believe that it can be tamed and handled by economic policy, because there must be other people out there that are smarter than us. Yeah. Or maybe they're not. And maybe there are forces that we can't control. Cycles are like breathing, inhale, exhale. Economies need a break, need a rest, and things come back around again. So I think, asking, should it have happened? It's a good question, but maybe it's just off in the future. Yeah. The reason I guess I feel so comfortable with multifamily or like it, and I think you kind of touched on it, but it is just an asset that's going to be there and it serves a utility. The problem I have with gold, I think Ray Dalio talked about, you shouldn't necessarily look at the performance of the asset, but the money that you trade for it, and what's the value of gold versus the value of the dollar over. That may not matter. Maybe it's what's the value of gold versus a house. Yeah, and the people who keep it for that, for the end big thing, then I always think of it, if I'm sitting in my house with food and guns and someone brings me gold to get the food, it probably isn't, I don't know what that value is going to be worth, but. So there are a variety of different things. Like Jim Rickards is worth reading on gold. Mike Maloney is worth reading on gold. There's others. I think most of them will say don't
like they'll be passionate about what they're writing about, right? And they'll go over the top probably on it, but there's balance in everything. So it's possible to have a portfolio that's got some precious metals and some real estate as well.
Yeah.
And that way, you may have a little bit more protection than if you're only in one thing with no diversification at all, and some stocks and other things too.
Do you usually see the stock market cycle and the real estate cycle? Do they line up? Like, did the stock market precede the crash of real estate?
One of the last things we were talking about was diversification, and unfortunately, I don't know enough about the stock market to really answer that question. I'm not as diversified as I would like to be. But I can tell you that the book, The Secret Life of Wealth or Real Estate and Banking, addresses the stock market a lot.
If you were
I was more interested in the real estate part.
Yeah. Would that be the book if someone's like, hey, I want to start looking into some of this stuff? Would that be the book you'd recommend, that one? What would be the first?
I don't know if on stock market?
No, on cycles or real estate cycles, let's say.
Yeah, I would recommend, I'm going to list them all if I can. And so the first one, and I'll list them in the order that I came across them. The Secret Life of Real Estate and Banking by Philip Anderson. So that was 2009. That one I think is important. It's foundational, and it builds on work done by Fred Harrison and understanding economic rent. If we have time, we might talk briefly about what economic rent is. Basically, free wealth that real estate investors benefit from. Then the second book is Principles of Dealing with the Changing World Order by Ray Dalio in 2021. The Fourth Turning was 1996. That was Neil Howe and William Strauss. The Fourth Turning, one of the authors, Neil Howe, has come out. I just discovered, thanks to you, that the Fourth Turning author has a new book called The Fourth Turning is Here, and it comes out in about 2 weeks. I've ordered it. So that one might be a shortcut, not to have to go back and read the other one. And then Philip Anderson's partner, Akil Patel, which we spoke about earlier, has a new book coming out in about a week as well, which I've ordered. And that's called The Secret Wealth Advantage. So it builds on the 18.6-year cycle, or goes deeper into more practical answers. So your question was, what would I recommend? Probably all of those books, but the Akil Patel book has the promise to be the most practical from the outlines that I've seen and what he's been able to share about that so far.
Are we tied enough to the States that it all correlates, or are some of these books, like, are they all written from the American viewpoint?
The 18.6-year cycle, they're based in Australia, and they study the US because that drives everything. Are we tied enough to it? Yes and no. I think we mentioned a little bit about resource-based economies and government interference and things that are going on can make it look like we're not in sync. And it's a great question that I'm not really that well equipped to answer. But we are tied to the U.S. economy. However, I think there are nuances from city to city, or state to state, or province to province.
And you brought up economic rent. I don't think I've heard that term. So
okay.
let's get into that.
So that was the foundation for the 18.6-year cycle, and Fred Harrison was the one who popularized that. Economic rent, actually Google anything these days, you can find out. There are some good descriptions of it. So economic rent is the value that accrues to property based on things that you don't have to do. So there's a good little tutorial that's maybe 10 minutes, I think, on YouTube somewhere. I'm sorry, if you seek it, you'll find it. But it describes if you were a new settler and you found land that was on the river, and it was lush land right by the river, so you've got transportation with the river. It's watered by the river. The land is free. That's where you're going to set up your farm. Somebody else comes along and you've already taken that space. They're going to need to take the space just beyond yours. And in order to do that, they might have to clear rocks from it. So there's going to be a cost to them to do that. They might have to irrigate it. They might have to build roads to get access to it. All of the money that they spend on that makes your land worth more, because the next person that comes along, they can buy yours or they can buy that other one that's equal to yours, but all that work and that money has been put into it. So you did nothing. You just farmed your land and waited. And with each farmer that develops their land further and further out, the highest cost of that last piece of land gets accrued to yours, and you've done nothing at all. So examples for you is you might own land, as I do, in the development path of a major city. When the city annexes that land, all of a sudden my land becomes more. I didn't do anything. I just waited for somebody else to do something to it. Or if you own land or a building that eventually becomes adjacent to a transportation route, because of work that other taxpayers are doing, that adds value to your land because of the work that they did building the rail line or the major highway that goes through that makes your land more accessible. You didn't do anything. You just owned it, held it, and waited for somebody else to do that, and you benefit from it. So all of the productivity that goes on in any urban area, the value goes to the land. And eventually you could get rid of the building that's on there and put something on that generates even more revenue from it. So economic rent is free money that real estate investors, or free wealth that real estate investors benefit from because of the acts of others. It seems unfair.
Yeah, it's a great concept. So if you're, well, you could be you, I guess. You're watching this and you see the next cycle come and it tanks, and we're thinking we're in the trough, and someone wants to get involved in whatever it is, real estate or whatever they want to buy. Is there in any of the books or anything, is there an indicator of how long you wait on the way up before you buy? Like, you're never going to catch the bottom, probably.
No. Yeah, you're never.
Yeah. So are you saying, hey, it hits the bottom, we wait a year, and as long as it's steady, like, is there an amount of time? Because you don't want to wait till it gets back to the top.
I think your individual knowledge of cycles and where we are on the cycle would drive that decision. And yeah, you buy. You're going to end up buying on the way down and on the way up, but hopefully not at the very top that you're buying, or being forced to sell at the very bottom. Yeah, the timing you're never going to get it exactly right.
Yeah.
But generally right.
So are you sitting and waiting, and would you jump back in and buy a bunch of stuff if it?
So as you probably know, there's an opportunity rising or falling in real estate. There's always something, as long as you have a sense of where we are in that cycle. So there's, what am I doing specifically? More important, what are you doing, or what are people listening to? But sitting and waiting is not a good strategy for very long. You need to find out what's going on in the market and what is the right investment right now. You can short real estate by investing in REITs if you really believe that values are going down. So there's always an opportunity, and finding what it is involves understanding macroeconomics, understanding your specific location where you're investing, doing the deep research so that you know your area better than Statistics Canada or CMHC or Province of Alberta. Those are just tools that you use. So understanding the big picture and drilling down so that you know it better than anybody else, as you probably do about the buildings that you own and the neighborhoods that you're in.
So back to the beginning here, what your business degree you got, how important was that for?
It impressed my mother. That's about it, I think. I did an executive MBA, and I'd been in business for 15 years before I did it. So it confirmed that I knew some things. It forced me to do that research. I had to choose a research topic. So I was interested in real estate, and I chose that. So it forced me to do that. But if somebody is looking for a career working for other people, an MBA is a good thing. Other than that, for me, like I said, it was confirmation that I really did know. I'm less intimidated by specialists in other fields because of the general education that I had in that. But specifically, other than forcing me to do a research paper on something that I was interested in. But that shouldn't stop you. If you want to do research, you can do it on your own or start a podcast.
Yes. So was there anything though that you learned like after being in business that long that you're like, man, wish I knew this 15 years ago?
Oh, I hate to say no, I didn't learn anything. Business grows and changes. And one of my favorite authors way back who wrote In Search of Excellence was Tom Peters. And he's, I think, recently retired. He's just turned 80. But every couple of years he came out with another book and it said, everything I wrote in my last book, forget that, read this one instead. And he built on and advanced the knowledge. So one of the things I love about business is it's changing and growing. The thing that is the most important, if that's what you're digging for, I think is relationships. It's always going to be that, how you treat people, what your values are, what you will and won't do, and choosing to do the right thing. And the people that you know, the people that you went to school with back in the day, they become successful and become your greatest allies. How you treat people is very important. So if I had to pick one thing that I've learned over my years, which are a few more years, is relationships. Huge.
Yeah, I'm not a huge proponent of going to college, and I obviously didn't, but a lot of people.
Wasn't obvious to me.
Oh, well, I don't know. I maybe never told you. But I'm the first one in my whole even extended family to go past grade 9. My parents were both grade 8,
yeah.
and but a lot of successful people are people that I would look up to or follow. Say something very similar. It's like you go to college for the connections, or we send our kids solely to make the connections, not so much what you're taking away from it.
I think I have 2 brothers and a sister. I think I was the only one, because I have no undergrad degree. I was the only one who didn't go to college or university in our family. And I did the MBA partly to please my mother. So yeah, there are different reasons for doing things. I do think that no education is a waste of time. You always learn something. So if people look at you and go, oh, he saved so much time, went right into business or went right into investing. Yeah, he did. That's great. But what does that person who feels like they spent 4 years doing an undergrad degree, what did they get during those 4 years that you or I didn't? And sometimes it's a wife. Sometimes it's a perspective that we wouldn't have gotten. So any education is, I think education is good, but not to the extent that you're relying on that to get a job and earn a living. And there are many different routes to success. But if you've already got the education, look back, who did I meet? What did I learn? What can I just like the question you're asking. And for part of it was, I was running 3 businesses while I was in school. So I wasn't, I wasn't out of the business world while I was doing that.
Yeah, I'd seen something last week, I think, and it was in the States though, but it showed regular inflation and it showed the cost of education. It's crazy how much that's.
I think I saw that too.
Went up compared to like everything else. And I don't know if you scale that out 10 years.
Well, our conversation, I've told you about all the books I'm reading, right? I'm learning all the time. University is sometimes a forced reading program. Read this, read that. It teaches you to read, understand things. But the cost of it seems out of proportion. I can't remember who it was that said there's like 5 things you should go to school for. And one of them was to become a doctor, because don't practice on me if you don't have some education. So it was medical. I think it was legal. To be a lawyer, you need to go to school. Some tech, would be helpful. And can't remember the other two, but there are certain things that, yes, you definitely need to go to school for. Other things you can learn on you can learn on YouTube. You can learn like none of these books I've mentioned are easy reads. They're all pretty dense books, but there's so much that we can learn from the work that other people have done if we choose to do the work ourselves of doing that. So yeah, it's hard to justify how much a university education is today in relation to what you get for it. You got to get a very high paying job when you get out, which is why if you do it, you might as well go to the most expensive school, because any other school is just going to be a few letters after your name.
And cross your fingers the government pulls through with the student debt cancellation or something, eh? What's the passion now for you? What you're reading? What's the next thing?
My lifelong passion has been seeking God. And I think that probably was the seed for me about cycles. I think that the Bible is the most enduring book that I've ever read. I read it over again every year. And it speaks about in Genesis, in the time of Joseph, in Egypt, 7 years of prosperity and 7 years of famine. That's a cycle. We learn about 40 years wandering in the desert. That's a cycle, eerily close to 220-year cycles. So there's a lot to be learned from that. It's that, to me, if you ask about my passion, the word passionate actually means what would you be willing to die for? And that would be it, is seeking the good news and sharing it with others and living out my life as I think Jesus would want me to. In my relationships with investment partners, suppliers, customers, which are the tenants. And like I said, relationships are very important. Treat people well, and that's a really good business model. It's a really good, simple business model, is just do right by people.
And how old were you when that journey started? That was your whole life.
I have to give credit to my mother for raising me with a church background, but it was when I was 26 that I kind of discovered that God was pursuing me. We just had a Zoom meeting this morning about that I had the privilege of hosting with the fellow who shared that information with me when I was 26 years old.
And at that point, I'm not sure if you ever mentioned your age during the timeline, but that was still in the dentist phase?
I was selling real estate actually here in Edmonton, coincidentally. And I mentors, for some reason, has been a big part of my life. My father is my favorite and best mentor ever. But I always looked for somebody that was older, that was ahead of me, that was where I want to go. And I was selling real estate, and when you're in sales, you go to sales conferences. You get to hear a lot of great speakers, motivational speakers, business speakers, and especially the American ones would quote the Bible or mention God or something like that. And some of them I thought were doing it to be cool, because it seemed to be cool, I guess. And others really meant something about it. So I also learned that some of the most successful real estate salespeople that I came across had a faith behind them as well. And I figured if I only had God on my side, I would do even better than I was doing. That wasn't the case, and that's not how it works. But that caused me to seek and find out how having a faith would integrate with my life in business. And it happened in ways that I wasn't expecting, which does involve, and again, cycles. It involves suffering and struggle and self-denial through periods that are difficult, and then other periods where things seem to go swimmingly well, and there's a lot of joy and happiness, and everything works. So,
is there a peak to that too?
Yeah, but it comes after I die.
There we go. Oh, that's good. Is there anything else you want to mention, or that we didn't talk about that you wanted to before we?
Yeah, I wrote down if there were some action steps from this.
Yeah.
because I figured you might ask. And I put down 5. One would be read those books or find others like it. And if you find others that are great, like my friend Jeff Stork that shared The Fourth Turning with me, it's like, sure, like tell me. If you come across something, let me know. But do the work of reading them and making notes and figuring out how you're going to apply that. Second is do the research, like what's going on in your market, and do the deep economic research yourself. Don't count on somebody else to do that for you. Podcasts are great to give you ideas, but you don't act on somebody else's, so-and-so said this, Shane said this, so this must be it, or Jeff said this. Go out and do the research yourself, how to apply those things. I would say invest in hard assets. I don't understand the stock market well enough to speak to it here, but I think real estate is going to be a good investment. But number 4 is manage your risk. So if you're investing in real estate, don't over leverage. Don't assume that because prices doubled where you live last year that it's going to happen next year. Make sure that you understand how you identify, mitigate, and manage your risk. What are you going to happen if the worst case scenario happens, to reduce it for yourself? And then the 5th, the last one, would be seek wisdom. There's always somebody older and wiser than you or than me that we can go to and find out, what are they seeing that I'm not seeing? And I'm going to add 5A, find younger people too, because they bring energy and a perspective that I don't have. So that's why it was a privilege to get to meet you. And I hope that we continue to build on that relationship.
Likewise. So we can put in the notes your email so far. Where's the best place for people to get a hold of you?
You don't have to be that resourceful to find somebody these days. So Jeff Gunther, you can. I've got some websites and a YouTube channel that I update occasionally. But if people want to find me, they can find me. I don't have anything to sell, but I love doing stuff like this because I learn in the process, and I learn from others as well. So I love to connect with people.
Perfect. Well, thanks for coming on. Thanks a lot for listening. If you guys do have any questions, feel free to send them our way and we'll answer them on one of the upcoming episodes. It definitely helps us out a lot if you guys can rate the episode, go write a comment. Goes a long ways as far as getting us out to new people. So that'd be much appreciated.